Nigeria as well, pretty good day after the recent slide we've seen. Of course, moderate weakness in the markets in Nigeria after the strong rally we've seen most of this year. The index yesterday closing at 33,335 points, up just over 0.25%, largely due to the gains we saw in Nestle Nigeria. That stock hitting an all-time high yesterday at 910 naira. Joining me in the studio to give us some perspective on the market, and of course, what we can see in terms of the M&A space in Nigeria is Akinola Jones. He's head of advisory at Primera Africa Finance Group. Thank you so much, Akinola, for joining us on the show. Maybe we should start with Nestle. Nestle hitting 910 naira. The results are expected to be released at some point today, so we should be discussing whether or not that share price is justified. Some people were saying it was going to 1,000 naira. It seems like it's likely to happen. What do you think?
Yeah, Nestle is exciting. I think Nestle is the story of the day. 900 naira. 52 weeks ago, it was 400 naira. 52-week low was 400 naira. Yeah. You know, foreign investors are definitely rushing to that stock. Yeah,
some significant gains there.
Yeah, and you know the numbers are justified. I don't think it justifies it up to the 900 naira range. We're seeing a 23% revenue growth last 12 months. We're seeing a 26 times enterprise value to EBITDA. That's high. That's pushing up pricey valuations in the FMCG.
But of course, a lot of people argue is that it's all talk about global liquidity, and of course, Nigeria is benefiting from that. The good names like Nestle are the ones that are most likely to benefit. But let's move on to M&A. And, you know, we see other stocks rising now. Some stocks in the insurance space, some agri-like companies like FTN Cocoa beginning to pick up. I want to talk to you about your thoughts on the potential for acquisitions and perhaps mergers in that space. Some people have been talking about that a little bit. We know the AMCON banks are likely to be sold within the next year or so. So that space is gonna really get going over the next few months. But talk to us about the likelihood, in your view, of some deals, looking at the valuations we're seeing on the market right now.
Definitely, you know, we're seeing Nestle's valuations going up, and that will lead to them looking at definitely some backward integration targets. You know, we think that that's also affecting the likes of the FTN Cocos. Yeah. You know, Cadbury to probably looking at some backward integration targets. When we look at the AMCON banks, what are we saying? Valuations are still too low, but they're still going to have to be sold. So, question is always going to be valuations. What are these banks going to be acquired for, and what kind of structure is going to be put in place so that AMCON can recoup the investments? What kind of debt of bonds are going to be issued to ensure, or equity shareholding is going to be ensured so that AMCON can get the right returns on investments. The insurance space, consolidation is the name of the game. We're seeing regulation is going to lead to consolidation. Stock prices, a lot of stock prices are flat in the 50 kobo to 1 naira range. But, you know, when consolidation picks up, we're definitely going to see a very good trend. The market's done 18% year to date, and we're going to see this market continue to rally. It's an exciting time. The only question we keep having is IPOs. When's that going to happen? And we're seeing some good signs with the UPDC REIT, even though that's not specifically an IPO, but that REIT is also showing some good signs. I'm still pushing that towards the end of the year, or pretty much early next year, we're going to see companies taking this market more seriously and definitely deciding to list.
I think a lot of people agree with you on that point. But let's talk a bit about sticking with the AMCON transaction. I want to get your thoughts on. I know you've said in the past that you think that AMCON is likely to take a huge hit if they're going to sell over the next 12 months. But we know that they should be getting the report from their advisors on what they're likely to do. Now, some scenarios that people have put out is that they may consolidate these three banks and sell as one unit. Your thoughts about how they're likely to play this?
I don't see that happening. I don't see them consolidating all three banks and selling as one unit. You can't. It's some of the parts. It's greater than it's greater than the whole. It's better to just sell.
It's better to sell each one.
The three,
to get probably more value that way.
Definitely. There's more value to be had in that sense. I think it's going to come down to what they've done. Last numbers I saw were 2011, but what they've done 2011 to 2012, how that book value has appreciated, how management has grown those numbers that we saw last, how they've grown deposits. I think it's going to come down to what they've done in that short period of time and how they've cleaned up. They have cleaned up the books, but people are going to buy potential. You know, you're not definitely going to be buying the value you're seeing today. Most of the book values, or most of the using a dividend discount model, most of the valuations we're seeing today are not that exciting. You know, they're not getting.
So perhaps not the best time to sell a bank. That's what you're saying.
Not necessarily the best time to sell. I think you wait a little while longer before you pull back.
The markets are recovering. Let's see how
we'll see how that affects it.